The cost of point-of-sales terminals in Nigeria has surged between 2023 and 2025, with increases ranging from 30% on the low end to as much as 100% for high-end devices. The jump, driven by inflation, foreign exchange pressures, and higher logistic costs, is reshaping the business model of Nigeria's fast-growing agency banking sector. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okeri. While entry-level POS machine that once cost 15,000 naira to 20,000 naira now go for around 21,500 naira, more advanced Android and smart terminals have doubled in price, rising from 30,000 naira to 40,000 naira to between 62,000 naira and 85,000 naira. The price increase comes even as the demand for POS service continues to grow, particularly in undeserved areas where the machines serve as the primary gateway to financial services. The growth in demand has seen the number of registered POS terminals in Nigeria jump to 8.3 million as of March 2025, according to data from the Nigerian Interbank Settlement System. While some commercial banks also offer POS to their customers on demand, the POS market in Nigeria is dominated by the fintech companies, which are aggressively pushing out the device as they onboard more agents. For many young Nigerians, the rising cost of POS machine is creating barriers to entry into one of the fastest growing small businesses sector. The increased costs are also affecting operators with multiple outlets who now struggle to expand aggressively. Some companies are turning to leasing models where fintech retain ownership of device but require higher transaction volume from agents. The price surge is closely tied to Nigerian macroeconomic environment. Inflation rose from 21.34% in December 2022 to a record high of 34.60% in November 2024 before moderating to 20.12% in August 2025. With most POS devices imported and subject to global supply chain costs, local fintech have limited ability to keep price down. The lack of local hardware manufacturing also means Nigeria is heavily exposed to FX movement. This means for aspiring POS agents, the cost of entry into business has become significantly higher, limiting opportunities for small entrepreneurs. While fintech companies such as OPay, PalmPay, MoneyPoint, and NUM continue to offer flexible models ranging from refundable caution deposit to outright purchases, the reality is that POS businesses are no longer as cheap to start as they were 2 years ago. Still, analysts say demand will remain resilient given the role of POS in Nigeria's cash-light economy. For millions of Nigerians in undeserved areas, these machines remain their closest access to point of formal financial service regardless of the cost. The federal government of Nigeria, through the Debt Management Office, has announced the listing of 200 billion naira worth of bond for subscription at its September auction. The offer, which opened on September 29, 2025, comprising 100 billion naira, 17.945% federal government of Nigeria August 2030 bond, which is 5-year opening, and a 100 billion naira of June 2032 bond of 7-year reopening. According to DMO, the auction will be settled on October 2, 2025, with units of sales set at 1,000 naira per unit. It added that interest on the bond will be payable semi-annually, while repayment will be made in full on the respective maturity date. The DMO also stated that the FGN bond qualifies as securities in which trustees can invest under the Trustee Investment Act, as well as government securities with the meaning of the Company Income Tax Act and the Personal Income Tax Act, making them tax exempt for pension funds and other institutional investors. Furthermore, the bonds are listed on the Nigerian Exchange Limited (FMDQ) Security Exchange and qualify as liquidity assets for banks in meeting their liquidity ratio requirements. The DMO emphasized that the bonds are backed by the full faith and credit of the federal government of Nigeria and are charged upon the general assets of the nation. The Debt Management Office has raised approximately 3.03 trillion naira from the FGN saving bonds in the first 8 months of this year. An analysis of the monthly FGN bond auction results between January and August 2025 indicates that the DMO offered about 2.13 trillion naira across short, medium and long dated bonds. However, an appetite for long dated bonds saw subscription hitting 4.94 trillion naira in the period under review. The Nigerian stock market ended last week on a positive note following the Central Bank of Nigeria (CBN) Monetary Policy Committee meeting. MPC cut in the policy rate of MPR by 50 basis points. Consequently, late session gain on the final 2 trading days more than offset the weak outturn in the earlier part of last week. Analysts noted that investor sentiment was buoyed by the MPC's first rate cut in 5 years, which drove renewed interest in equities. It will be recalled that the MPC last Tuesday reduced the MPR by 50 basis points to 27.0% from 27.50%, marking the first shift towards the monetary policy easing in 5 years. The committee's decision to cut rates was primarily driven by sustained disinflationary trend, continued stability of naira, and robust external reserve. Analysis of trading on the Nigerian Exchange Limited shows that the gain in Zenith Bank by 9.1%, followed by Dangote Cement, which went up by 1.7%, Stanbic IBTC by 9.3%, WAPCO by 4.0%, and International Breweries by 10.1% to drive the NGX All-Share Index. The All-Share Index higher by 0.2% week on week to close at 142,132.02 points from 141,845.35 points the previous week. The month-on-month to date and year-to-date returns improved to 1.3% and 38.1% respectively. The NGX market capitalization gained over 216 billion naira week on week to close at 89.960 trillion naira from 89.744 trillion naira the previous week. Trading activities also strengthened as both volume and value advanced by 73.8% week on week and 257.7% week on week respectively. Meanwhile, sectoral performance was mixed as the industrial goods index went up by 1.3%, followed by consumer goods index by 1.2% and banking index by 1.2%, while the insurance index by minus 0.9% and oil and gas index by 1.6%. Nigerian tax landscape is set for a historic overhaul as the Federal Inland Revenue Service explained that the federal government reform exempt food
education, shared transportation, and agriculture from value-added tax. The reform, described as the most significant fiscal transformation since independence, are designed to ease the burden on citizens and businesses while improving government revenue collection. The executive chairman of the FIRS, Zak Adedeji, reveals that these changes in an interview marking his 2 year in office. He credited it to President Bola Ahmed Tinubu for fulfilling his campaign promise to simplify tax compliance and remove hurdles faced by taxpayers. The reform consolidates multiple tax laws into a single code scheduled to take effect in January. The new code reduces the number of tax types to a single digit, introducing a simpler framework for individuals and businesses, and provide relief for smaller enterprises. Under the provision, businesses with annual turnover below 50 million naira will no longer pay tax, while threshold for personal income tax have been adjusted to protect income earners. President will sign 4 major bills into law on June 26, 2025. The Nigerian Tax Act, the Nigerian Tax Administrative Act, the Nigerian Revenue Service Establishment Act, and the Joint Revenue Board Establishment Act, collectively known as the Tax Act Quota. They aimed to broaden the tax base, improve compliance, and enhance transparency across all tiers of government. He noted that Nigerian tax to GDP ratio has risen from 10% to 13.5% in just 2 years, with a target of 18% by 2027. In August, the Federation account disbursed a record of 2 trillion naira, with nearly 70% of monthly government allocation now coming from taxes collected by FIRS. It disclosed that improved revenue has helped 30 states repay 1.85 trillion naira in debt within 18 months, while debt servicing costs previously consuming 90% of the government revenue have dropped to 50%. External reserve has also grown on the back of stronger fiscal stability. As part of the changes, the FIRS will be renamed the Nigerian Revenue Service to reflect its role as the central tax authority for all tiers of government. Let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point on Global Television, where we extract the Nigerian economy and the government policies. The Nigerian National Petroleum Company Limited has signed another 2-year crude supply agreement with Dangote Petroleum Refinery. The deal signed last month will ensure the steady supply of crude to 650,000 barrels per day refinery located in Lekki, Lagos. It was further gathered that the deal is in line with the federal government's determination to supply more crude to the facility, especially in Naira. It was learned that about 82 million barrels of crude have been allocated to the refinery from October 2024 to date. Out of 82 million barrels, 60% being 49.3 million barrels was sold in Naira to refinery. According to details obtained from the NNPC on Monday, out of 82 million barrels, 60% being 49.3 million barrels was sold in Naira to refinery.
According to the detail obtained from the NNPC, recall that the Dangote refinery recently announced stopping petroleum sales in Naira, citing the exaltation of its crude for Naira allocation as the reason. But hours later, the Naira for Crude Technical Committee chairman intervened, and the company announced the resumption of the PMA sales in Naira. The value of transactions executed by foreign investors through the Nigerian stock market increased by 1.71 trillion naira as at the end of August 2025, about 541%, up from 262.85 billion naira in the same period in 2021. This domestic transaction and foreign investment reports released by the Nigerian Exchange Limited shows that the foreign portfolio investment inflow during the period was 748.23 billion naira, about 506%, up from 123.46 billion naira recorded in the same period of 2021. The report also shows that investment outflow increased by 436.8% to 748.23 billion naira in 2025 from 139.3 billion naira in 2021. Meanwhile, transactions at the nation's bourse increased significantly by 240.8% to 6.916 trillion naira as at August 2025 from 1.213 trillion naira in 2021. Findings in the NGX report further shows that the value of transactions by domestic retail investors increased by 475.8% to 2.332 trillion naira during the period in 2025 from 404.77 billion naira in 2021, while the domestic institutional investors transaction grew by 473.3% to 3.13 trillion naira against 545.99 trillion naira in 2021. Market analysts have interpreted the figures as a sign of growing confidence in Nigerian equities, driven by both institutional and retail participation. The NGX noted that long-term trend further underlined the growing importance of the domestic market. NGX added that over the last 18 years, domestic transaction on NGX rose to 33.15% from 3.556 trillion naira in 2007 to 4.735 trillion naira in 2024, while foreign transaction grew by 38.1% from 616 billion naira to 852 billion naira over the same period. In 2024, domestic transaction accounted for about 85% of total trading, with foreign transaction making up by 15% at the NGX. Trading activities on the Nigerian Limited opened the week on a positive note as investors gained 115 billion naira in the market value on Monday, driven by a strong performance in the banking and oil and gas sector. At the close of transaction, the market capitalization listed equities advanced to 90.1 trillion naira from 89.99 trillion naira recorded at the previous session, reflecting a gain of 115 billion naira. Similarly, the benchmark all-share index appreciated by 244.51 points, that is 0.17%, to settle at 142,377.54 basis points. Market data shows that a total of 383.93 million shares worth 11.61 billion naira were traded in 28,088 deals, representing a 26% decline in volume and a 36% decline in value compared with the last Friday's session. Although the number of deals rose to 26%. The day rally was largely supported by buying interest in stock such as Fidelity Bank, Zenith Bank, Eternal and Seplat Energy, which buoyed the bank and the banking and oil and gas indices. The NGX Industrial Index gained 1.59%, while the banking index advanced to 0.47%. A total of 125 equities participated in the trading, with 25 gainers and 36 losers. On the flip side, Axe Massard Insurance topped the losers list, shedding 10% and closed at 14.40 naira per share. University Press dropped by 9.85% to 5.40 naira. Len Africa fell by 9.72% to 6.50 naira per share, while Julius Berger depreciated to 8.7% to 136.50 naira per share. Analysts noted that this earnings report, coupled with the broader market momentum, reflect the resilience of the Nigerian corporate sector despite microeconomic headwinds. They added that Nigerian economy is gaining momentum with a recovery in oil production, expansion in non-oil activities, and looser monetary policy. However, they caution that while opportunity exists in energy, ICT, agriculture, and finance, investors should remain diverse and cautious. Alright, this is where we'll call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms as Global TV NG. Till I come your way again, I am Kike Lobo Okeri. I celebrate you all.